Look, a lot of people will try to overcomplicate trading when it really doesn't need to be. You can do extremely well with simple setups. Let's just start with this. What do we actually want to look for? We want to look for price action that looks like this. Any time frame will work. I prefer the hourly or H4 chart, but really what I'm looking for is a few hours of sideways price action. The longer that price goes sideways for, the better, but there really doesn't need to be any minimum or maximum amount of sideways price action to look for. Anything will work. Now what? Well, we want to wait for price to pop out of the consolidation period, so it looks something like this. We want the hourly or H4 candle to close above the consolidation period, which is this. And when this happens, we'll be setting bids at the top of the consolidation period right here. But it's very, very important to wait for the H1 or H4 candle close above the consolidation period. Okay, so price has closed above the consolidation period. We have our bid set at the top of the consolidation period. And if things are as aggressive as the argument says there are, you should be able to fill your bids here and price bounces away from this level. So with every trade argument, we need now an invalidation point. We need to keep our risk management in check always. So the invalidation point for a consolidation retest setup like this is below the consolidation period, because the bulls have won this battle. So the bulls do not want to see price close back below this entire consolidation period, right? Because they worked so hard to actually break out of this consolidation period, it would be seen as a loss of the entire bullish argument if the bulls lost this retest here and they were unable to hold a retest before falling below the consolidation period. So the invalidation point for this long setup is going to be the consolidation period lows right here. This is the setup. This is the pattern. Now let's go into some more real world examples and see it actually happening on the charts. So consolidation period for a few hours on the H1 or H4 chart, an hourly or H4 candle closing above the entire consolidation period, bids set, bids filled on the retest at the top of the consolidation point, invalidation point below the consolidation period. Now that you're aware of this pattern, you're going to see it absolutely everywhere. Truly, you see it everywhere. And it doesn't need to only be on the long side. You could look at this consolidation period on the short side as well. But obviously, consolidation period, H1 close below the entire consolidation point, invalidation above, just everything we talked about, but just flipped, right? This works for both longs and shorts. The pattern itself is great and extremely powerful, but what we want to do is make it as strong as possible. And the way we do that is adding layers of confluence onto the original trade argument. So our original trade argument is this pattern, right? A consolidation break from this pattern. To add more confluence, let's zoom out a little bit and see where this consolidation break is happening. On the break, are we reclaiming any kind of key level on the H1, H4, even the daily time frame, any significant key level? If yes, this is a higher hit rate trade setup. Let's do another real world example here. I'm on the H4 chart, the consolidation period, the break of the consolidation period, bid set at the top of the consolidation period. Obviously it dipped within the consolidation period, but again, because price did not close below the consolidation period, this argument is still valid. We've completed step one, which is identify a consolidation period that we would like to take a trade based on. Now what we want to do is look for confluence for our position. So what that does is allows us to maybe increase risk just a little bit. And really what it mostly does is make us feel better emotionally about the trade. It's a lot easier to take positions that have several layers of confluence. So the level that I've identified here is the H4 level that price broke out from right here. So just before I get too deep into it, this is also an H4 consolidation period, and this is also an H4 consolidation period retest. So obviously this is over a large amount of time here, but the retest still did happen here. So that could have been another trade opportunity. But the confluence level that we have here is this H4 breakout point. If we extend this to the right, we have to see if this is going to add any support to our consolidation argument, which is right here. So we do have that support. So in addition to the consolidation period above here, we have our invalidation period below the consolidation period, which is confluent with a massive H4 level right here. Really, the best thing you can do now is get into the charts and look for this pattern. Backtest this pattern, see how you can approach it, look for the different layers of confluence, and add this pattern to one that you're always looking for. You are going to see it absolutely everywhere. So I hope you enjoyed. If you have any questions, comments, anything like that, leave it down below, and I will do my best to answer everything I possibly can for you. Thank you.